Please collapse. The housing prices are stupid. This is a comment on my channel from 5 months ago, and folks, some of you might be getting your wish. Hey everyone, meet Kevin here. It's time to talk about what's going on in the real estate market, and folks, we've got a lot of updates. Look, back in 2012 and 11, when I was actively selling real estate, which I'm not right now other than my own real estate, as a real estate broker, I always used to tell folks, look, one of the best ways to build your wealth and quite frankly retire early is real estate. It's almost like get rich for sure, but hashtag not guaranteed. And what I used to say is, if you just started at 25 years old and bought a house for $100,000, and then every 7 years bought a house for $100,000 more, at the end of that 40 years, when you're around 65, retirement age, you would have almost $10 million of real estate with a lot of that paid off. How many people do you know that have $10 million of real estate, let alone a bunch of that paid off? Like, you would never even have to think about index funds or stocks or a Roth or anything. Like, you could do it all solely with real estate. Now, that's not saying you should, okay? I'm a big fan of stocks as well. But folks, buying real estate is a good idea. So, are we going to have an opportunity to buy some real estate coming up? What's happening in the real estate market right now? What do I think is going to happen? And what can you do to prepare yourself? Well, that is the point of this video. This video is, of course, though, brought to you by a sponsor. It's my programs on building your wealth with real estate, featuring over 90 years of combined real estate investing, property management, and rental renovation knowledge. If you don't know anything about real estate and you're intimidated by real estate, the best way to start is with the 0 to Millionaire investing course, and then you can always graduate to the do-it-yourself property management and rental renovations course. Start with 0 to Millionaire. You can also bundle these together for the best price. Just make sure to use the coupon code expiring August 19th, linked down below. Okay, folks, so here's what's going on. After Valentine's Day this year, about 6 months ago, I made a video explaining that there's a massive risk that mortgage rates will go above 5% by May and real estate prices could start coming down. People called me nuts. And you know what? They were right to call me nuts because I was wrong. Real estate mortgage rates did not go to 5% by May. They actually went to 6% by May, which is even worse. Now, currently, they're settled right around 5%. But what happens when mortgage rates go up is buyer purchasing power goes down. Now, we have a really handy tool for this, and that's that for every 1% that we see mortgage rates go up, we tend to see about 10% less buyer purchasing power. That doesn't mean prices go down by that amount because there are other things involved, like inventory, right? How many homes are available for sale? Well, this would then relate to about a 2.3% increase from where we were at the end of last year, or about a 23% reduction in buyer purchasing power. That's pretty substantial. And so we would expect that this has all happened over the last 6 months to start seeing some signs of these higher mortgage rates actually trickling through the market. The problem is, back in February, you still had real estate agents on TikTok calling everyone stupid for suggesting that prices could soften because there's not enough inventory. And it wasn't really until I decided, you know, I'm gonna sell my real estate because I've got a big Series A that we're launching, hopefully within the next 30 to 60 days here. And this big Series A is gonna be like a real estate investing company and a SaaS company. So I thought, you know what, let me sell my real estate. And I'm not recommending that for people, but I sold my real estate. And I'm doing that because I'm taking that money and preparing it for this new company we're launching. So I have a unique situation in that case. But I also thought, if I am selling, I'm probably selling at a potential peak. But this is where I really started scratching my head. See, at the time I sold in January, February, March, April, there were only like 60 homes on the market in my city, and I was adding about 22 to that. And I'm like, oh my gosh, how can just one person single-handedly increase housing inventory by 30+% in one market? And that's when I realized, whoa, wait a minute. It's not gonna take a lot of Kevins who start thinking, yeah, maybe we've had a good run in real estate. It's time to, pare back a little bit and maybe sell a little bit. And then you start seeing inventory skyrocket. And unfortunately for the real estate market and its trend of continuing to go up, that's exactly what happened nationwide. Housing inventory exploded in the first 6 months to now 8 months of this year. In fact, so did the monthly supply of new homes. See, this is existing homes. This is new homes. And what's wild about new homes is new homes right now are sitting at about 2007 levels. And I'll tell you, there's nothing anybody wants to hear who's in real estate that relates to 2007 and 2008. It's kind of a really scary comparison to make because what happened next was a disaster. That is, in 2008, what did you end up having? Well, you had a pretty much collapse of real estate prices. Not only did some commercial real estate drop 45 to 50%, some condos dropped 50%, single family homes dropped 35 to 45%, depending on the area you were in. These are huge, massive plummets in real estate prices, right? It was all followed by increasing inventory, which unfortunately is literally what we have now. Most available units in the Pacific Northwest since 2019. Housing inventory up the most as a percentage basis in the last 12 years. Housing inventory nationwide rises for the first time in years. But in addition, you've also got that, remember, decline in purchasing power from rates going up. Yeah, not only do you have that inventory going up, but folks, home buyer affordability at a near 2-decade low. Which again, hate to say it, not only are we now below trend on housing affordability, but we're also starting to look at the chart again like we did in 2007 and 2008. Not only are we looking at the chart like it's 2007 or 8 again, but that leads to a lot of nerves and anxiety, especially with home builders starting to panic, like Lennar, who's quickly increasing incentives to home buyers to try to still prop up home prices, but behind the scenes, passing them a little bit of cash to go buy down their loan or to do some upgrades that they really wanted to do. This is sort of a way of artificially keeping prices up a little longer. And this is directly from their earnings call, okay? They've got some markets which are seeing significant market softening and a correction, leading to more incentives. But of course, all of this just aligns really with what we're hearing, which is what Wall Street is suggesting, and that is that, in short, we could expect valuations for home building companies to even come under pressure as the real estate market begins to crack. But I mean, maybe things are different this time around, right? Credit scores are higher, people are more qualified, people have more equity in their homes. That means the extra value of cash they have in their homes is higher than it ever has been before. Foreclosures are still lower than any year prior to the pandemic, and the job market is holding up, meaning we're not really seeing that crazy joblessness that would generally precede a real estate crash. And this is leading a lot of folks to say, well, Kevin, this time is different. We don't have to see real estate prices come down. And this might be true. But what's also true is that the most dangerous words in investing are "this time is different." Now, before I show you what's happening to prices, my sponsor agent says he's gonna fire me if I don't play this next sponsor, which I'm happy to bring you. Here it is. But thank you to today's sponsor, Keeps. Did y'all know that 2 out of 3 guys will experience hair loss by the time they're 35? Well, thankfully, today's sponsor, Keeps, offers clinically proven research-based treatments to stop hair loss and improve hair growth. If you're too embarrassed to go into CVS and talk to employees about your hair loss or dread going to the doctor's office, then don't worry, because Keeps is an online subscription service, meaning you can get everything your hair needs from the comfort of your home, delivered straight to your door without all of the hassle. Whether you're looking to prevent hair loss, stimulate hair growth, or just take better care of the hair that you already have, Keeps has got you and your head covered. Not only does Keeps show proven results, their treatment plans are extremely affordable, typically half the cost of that of a pharmacy, and you don't have to interact with anyone while you get to save money. You can easily subscribe to Keeps and get refill reminders so you never run low on the products you need to take care of your hair. Hair loss stops with Keeps. And to get a special offer on Keeps, go to keeps.com/meetkevin or click the link in the description. Again, that's keeps.com/meetkevin. With that said, let's get back to the video. And unfortunately, the price declines have already begun. This is the chart of average new home prices, which have come off substantially off of this insane peak of about 570,000 all the way now down to about 468,000 for new homes. But it's not just new homes that are starting to see a compression of prices, it's all homes. In fact, this is the Redfin data center, and you can see the median price of homes actually closing is starting to trend down, which is not a seasonal experience that we tend to have. It is just happening because mortgage rates have skyrocketed, inventory is skyrocketing, and we're seeing more price drops, which all corresponds to home prices starting to fall. And that's just what we're seeing. Home prices are officially starting to fall. Now, real estate tends to be pretty slow. See, even during the 2007 to 2009 real estate crash, the largest single month slowdown in real estate prices was about 1.19 percentage points per month. So if we ended up dropping 40% in some markets, it took somewhere around 35 months to actually get to your real estate low. It's because I see real estate as like this giant snowball, and when you get it up a hill, it like slowly starts accelerating. Like it really takes time to crest around that. And as you get to sort of a trough, it really takes time for it to actually slow down. Even when it gets to the flat part or even starts hitting some resistance, it's still got a lot of momentum behind it. So in other words, it takes an extra long time for the real estate market to react to some of the conditions that we're seeing right now. And this is leading to this really interesting thesis, and this is speculative, but I do want to get into what I think is actually going to happen and what you should do to prepare yourself. But this little speculative argument is kind of neat. Some folks are saying, hey, Kevin, and I believe this, we might see a stock market bottom, this red line, and then the stock market run again towards the end of the year and beginning of next year. While at the same time, real estate really only starts its decline as the stock market bottoms. And real estate prices are at their lowest, potentially when stock prices are at their highest, sometime at the beginning of 2023, maybe later in 2023, maybe even at the beginning, or sort of the end, I should say, of 2022. So some things to pay attention to. So what should we do to prepare? Because if the real estate market is going to see a compression, or sort of at least a reversal of COVID trends, which that's a lot of what we're hearing right now, is a reversal of the COVID effect, especially in what are called Zoom towns in areas like Arizona or Boise, where we're really starting to see some massive changes in the real estate environment, even Austin, Texas, right? Like places people flock to because of, the pandemic and lower taxes and politics and everything. But anyway, what should we do to prepare ourselves? Well, in my opinion, I would make a list of these things, and I would write these down because I would want you to remember these. First thing I would hope that you can do is share the video, because I think the advice is invaluable no matter what ends up happening in the real estate market. Personally, I believe we're probably going to see real estate prices go back to the trend that we saw in 2018 and 19, which means prices probably should come down somewhere between 10 to 25%. Maybe somewhere closer to 20% if I had to pinpoint it. But anyway, write these tips down. So the first thing that you should absolutely do is get educated. Start getting yourself educated on real estate, whether that means watching YouTube videos, getting courses. That could be mine, it could be somebody else's. Just stay away from flipping, okay? You don't want to be flipping in a market where prices are going down. You want to get educated on buy and hold real estate, or at least longer term real estate where you're looking at longer term capital gains, and you're being smart with how you're renting to tenants, because you don't want to get in a situation where you're dealing with evictions. And you generally want to start with your own home that eventually you could turn into a rental. It takes a lot of the pain away, and it's a much better deal. Anyway, number one, get educated. Number two, do whatever you can right now to see if you get that higher paying job. Can you lateral into a higher paying job? Can you ask for a raise? Can you work a side hustle so you're bringing in more taxable income? You want to be able to show lenders and banks, my income's going up, not down, baby. We'll make more money. Let's go. That's what you want to be able to show right now. And the next thing that you really want to do is make sure that you're minimizing your debts. Lower your expenses, have less debts, pass on the new car, pass on financing that furniture right now. It's not worth it. Save the money instead. Pay down debt, save the money, and get your debt to income ratio low. You want less monthly payments, because every single dollar of monthly payments that you have costs you $2.31 of less purchasing power. That means if you have a $100 credit card bill every month that comes in, pay that off, and you'll be able to afford or be able to buy a home, qualified to finance a home, for $231 in monthly payments more per month. That's a lot. There's a huge multiplier there in debt, so you want to be out of debt. And you want to master your credit here. Now, you don't need a perfect credit score. You can buy a home with easily a 640 or above. It's just going to be a little bit more expensive. And if you could change your behavior now, in 6 months when it's time for you to buy, your credit score could be higher. Make multiple payments per month. Don't wait until your statement is due. Lower the amount that you're outstanding and putting on these credit cards in the first place, and stop financing new things and getting credit inquiries. Next, talk to a lender. Now, this might sound ironic because I'm like, stop getting credit inquiries on a bunch of different stuff. I know this sounds ironic, but when you talk to a lender and you find a good lender, they're going to want to run your credit. Let them. Otherwise, they're going to think you're not serious and they're not going to be interested in helping you. So let them run your credit. Let them then coach you through how we can increase our credit and be most prepared, whether that means paying something off or saving more money or which loan program we'd qualify for. Let them guide you. So get educated, save money, build up your credit, get rid of debt, talk to a lender. And then number 6, start trolling open houses. Like, go to open houses and tell them I'm going to be looking to buy, maybe a fixer-upper in 6 months or whatever. I watch Meet Kevin. He talks about buying wedge deals. How can I buy a wedge deal? How can I get a deal below market value? And how do things change if prices are trending down? Do I need more of a wedge? What can I do to protect myself? These are all the things that you should be thinking of. And folks, I really encourage you, check out the programs on Building Your Wealth link down below, share the video, and get ready. Because so far, everything that we've been saying at the beginning of the market is likely to happen in real estate has been happening. So buckle up for the next phase.